Welcome to session number 2. Session number 1, we talked about who controls the market, the institutions, the banks, the clearinghouse, all that stuff. I do think that the algorithm has an effect on the market, but I just leave it as simple as institutional and banks and clearinghouses that control the big pushes in the market. I think that's enough information for me and have this understanding that the algorithm can have an effect on it, right? Again, I try to keep things very, very simple and try not to make things complex. Just getting a bit of information to who controls the market. It's not us, it's them. All right. Now, my whole deal was trying to trade when they trade. Okay. Not when us retail traders are looking in to get in at retest points, or we're trying to get in on a trend line point, or we're trying to get in the middle of nowhere. I am trying to simply get into a trade when the banks, the institutions declaring the algorithm, when they all kick in. That's my point of trying to get into a trade. Now, session number 2, trend of the market, the structure of the market. There are 3 phases in the market that we must pay attention to: bullish conditions, bearish conditions, and sideways movement, which we should all stay away from. It's very important we stay away from that point. Okay. Now let's dive into the charts and let's just look at the different type of market conditions here. Okay. So we're still on the basis. We're still dealing with the basics here. I think that as an experienced trader, we sometimes forget the small little details that can help us be more profitable in trading. Okay, so let's get to the basics here. Okay, when the market is in a bearish condition, okay, and again, I'm not going to talk about complex at all. We'll deal with that maybe in session number 3, okay, or we'll tag it in down the line. All right, now the market makes lows, right? The first low for me is, maybe the market was making highs. The first break is a low here. I like to label these low. All right. Let me rephrase that. I like to say lower low. And you guys can copy this as well. NC. NC means not confirmed. Okay. And now I like to say lower high. Okay. Not confirmed. Okay. The reason being is that if the market is trending up, right, and it just makes one lower low, not confirmed, the market can still tap into a demand zone or tap into a weekly, wipe out a weekly candle, or a lot of liquidity, whatever you want to call it, and then just go bullish. Okay, so it is not confirmed at the first one. Now, the second one, it's called break, right? Break, pull back, close. Now we have confirmed a lower low. Okay. Lower, just do LL, break, okay, pull back, close. Now we confirmed a lower high. Right? Hopefully this should make sense. We're just talking simply about trends in the market. Down the line in different sessions, things will start to make sense to you as a trader. Okay. And then I'll start to dial this in. All right. This is the condition of a bearish market. When the market, how do we see this with just the eye test? I love to do an eye test. The eye test tells me, is it pointing down or is it pointing up? Okay. Are we facing this way? This is why you can use trend lines, right? Are you facing this way? Right? Or are you facing this way? Right? Now, the 3 examples that I gave you, our eyes tell us that the market is facing downward. It's facing downward. It's very, very important, right? It's important just to understand just by looking at your eye. Before you mark up anything, if you can understand that I'm just looking at it. I'm saying, okay, the market is bearish. Let me look for sells only. I'm not saying that you can't take buys, but again, let's keep this very basic. I think that all beginner traders should stay away from counter trend trades. What is a counter trend trade? If the market is going down, it's bearish, the structure is bearish, all that good stuff. Don't try to look for buys. You're going against everybody else who's in the sell, who's pushing the market down. Okay, those things are very, very important. Now, structural base. The structural base of this is it's making lower highs and lower lows. The trend is that it's facing down, it's trending down, and the structural base is down. When I say structural, it's making lower highs, lower lows, lower highs, lower lows. Okay. It's the structure's down. The structure is a lower high, the structure is a lower low. That's a structural base. Okay. Those things to understand that is very, very, very important. All right. Now, when the market, remember what I told you about over here, if it breaks, pull back close, right? Now let's just go on the other side here. All right. Now, when the market goes like here, right, does this is just considered a high because again, and then straight back down and continue bearish. Okay. So for this segment here, let's put this market inside of this right here. Okay. Now, remember, let's just take this and put this over here. Now we have a high, not confirmed. We have a higher low. Oh, let me explain that as well. Why it's called a lower high is simply because this high is lower than this high. This lower high is lower than this one. This low is lower than this one. That's why it's called a lower low. It's lower than this one. This one is lower than this one. That's how we understand that the structure is just going down in steps. Okay. Now, same thing here. High, not confirmed. Higher low, not confirmed. Break, pull back, close. Okay. Oh, my bad. Now we're over here. Now we simply have a higher high. Okay. How simple does this sound? This high is higher than this high, this high, this high. They're all higher. Okay. That's why it's called a higher high. But more importantly, it's higher than this. Okay. It's higher than this. The market is now trending in a bullish fashion. Okay. Same thing that we had here. These lows were just lower than the previous. Okay. This higher low is now confirmed. Drop my mouse there. This higher low is now confirmed. The market is now in bullish sentiments. Okay. That is the gist of eye test. This right here, let's turn this into a different color. Let's turn this into green for money. Let's turn this into red right here. Boom, right? Our eye test says, oh, and this is why we draw a trend line. So let's use a random color for trend line just for now. This is why we draw trend lines. I don't trade off a trend line, so don't get it misconstrued. This just gives me an idea to help me understand that the market is in a bearish sentiment here. Okay. This is why I draw trend lines. Sometimes they're not going to connect like this, but I'll show you later on in videos when we get there. Okay. Same thing over here. These trend lines are just helping me with directional purpose. Okay. So they're not going to be as clean as this when you're on the charts. Believe me, not going to be as clean. Okay. I'm just kind of cleaning this up just for now. Just want to make this a little bit more presentable here. Okay. Now, sorry guys, I like things to be like real neat. I can't help it. Really can't help it. Now, again, it's the same thing, but I draw trend lines if you need help or assistance to look at the view of the market, right? So look at these arrows here. It's obviously eye test is telling me that this is pointing up. We're in a bullish market. The trend it's trending. Now, trending and structure is two different things. The structure could be up, right? But price could be trending down. All right. We'll get into that at a later base. And we'll talk about that at a different clip because that's a little bit more experience level. Now, we're going to get into a very, very important phase of the market, which a lot of you, especially beginning traders, even experienced traders, stay away from here. Stay away from it. It's called a sideways movement market. A lot of the times, this is a building liquidity type of deal here. All right. And I'm going to show you what I mean. I'm going to show you what I mean by building liquidity. Now, what a sideways market is, I mean, it's very simple. The market is not trending. It's not switching structure. It's just simply going sideways. Okay. Sideways movement. What this does, 9 times out of 10, it's just building money above these areas. What I mean by that is that the market is doing this on both sides. Remember, you can pause this video and answer this for yourself. It's just money across here. Answer this for yourself. Is the market still bullish or bearish? Pause the video, go back and answer the question. Okay. Is it still bullish or is it still bearish? Okay. The market is still bullish. It has not broken this area yet, and it has not broken this area. The market has not broken this area yet. So let's just change this color here. Let's just do orange. It has not broken. Remember what, you can pause the video again. What happened over here? Okay. In order for the market to go bearish again, it must break, pull back, close. The same thing you see over here. This will be a low. This will be a lower high, not confirmed. NC. Okay. Low, not confirmed. Oops. LL. Lower low. No, sorry. I'm bugging. This will be NC. This will be low. NC. Okay. Now, once it starts to break, pull back, now we have a downward motion. Okay. But let's get back to what we're talking about here. However we want to look at this, the institutions, the banks, the clearinghouses, the algorithm, what they want to do in this instance, and this is why I'm telling you to stay away from sideways movement market, is because they're generating people to sell here. They're generating people to buy here. When we want to buy in this area here, right? We want to buy here, right? Or we want to buy here, right? Maybe there's some liquidity below here, and maybe want to buy here, right? But my point is, they're generating a pool of people to get into the market where the market is not trending. It isn't doing anything but building liquidity here, okay? 9 times out of 10, once they set everybody up, their orders are filled enough, there's enough momentum to get into the market will do this. It will dip down, wipe out this pool of money, right? All these people who are buying on this trend line or buying on this support and buying in this area, you're calling your auntie, you're calling your uncle, you're telling your sons, your kids, late grandma, calling all your best friends, yo, let's get into the market. It ain't breaking this area. What happens? Okay. I want you to look at me here. What happens when you use an axe and hit a tree? Hit it in the same spot 20, 30, 40, 50 times. At some point, it will drop. Okay. Use the same concept here. Okay. Every time you buy, at some point, what's going to happen? Use the axe. Boom, boom, boom. It's going to break. It's going to drop, right? They're setting you up here. We do not want to get in at the setup. We want to get in where we think the market has the best chance of going up. Okay. So now the market, all these people who are buying, all these people are selling. Sell. Hey, bro. Sell. Hey, sis, sell. 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 Buy. 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 What? Market's like, yeah, we got them. It's going to wipe into a demand zone, or it's going to wipe into taking out a previous low that had a lot of liquidity and maybe come down into a demand. Tap into this, wipe. All these buyers are out, right? All these sellers who are in the market who, yeah, I told you we were going to win. The market is going to move away very, very fast. Okay. This is why I'm telling you to stay away from here. And if the market is in bullish sentiments, look for buys here. Okay. That's what I'm trying to explain. Stay away from this here. Stay away from it. Okay. Only I'm going to show you right now where we should be buying and selling the market. Okay. We should only be looking for buys in these areas here. Let's just circle buys here. But never mind the trend line. We're just talking about at the higher lows in the trend market. We should only be selling the market here at a discounted price. Just imagine price being at a low and you're trying to sell the market. Think about trying to buy the market at a high. Let's take Bitcoin for instance, right? Bitcoin is at an all-time high. Why would you invest in a Bitcoin and it's all the way at the top? How about we wait for a pullback, a reversal down to where price is at a discount price, then we invest. Okay? So this video was all about looking at the different types of direction of the market. The trend, bullish, bearish, right? The structural base is down. Looking at the market from a naked eye test, it's going up, it's going down, it's going sideways. We stay away from it until the market starts trending again. Now, I didn't even know I was on UJ, right? We look at a lot of just instances, right? We're looking at, let's just do a naked eye test here. Let's not make this video take too long. Look here. Are we pointing up or are we pointing down? You can pause the video and then go back to it. Simply just draw a trend line. We're pointing up. Okay? Right here. What are we doing? We're pointing down. Okay? What are we doing here? We're pointing up. This is just naked eye test here. Naked eye test here. Look at this. We're going down. Okay? Look at here. We're going down. We need to stick to sells. We need to stick to some selling conditions. Okay? Now, I'm trying to find, oh, here's consolidation. Here we are. The market is not making highs. It's not making lows. Stay away from it. This is called consolidation. Okay? Consolidation. Look at here. Market is not trending. It's not buying. Stay away from it. Okay? Stay away. Look, even on a smaller time frame, just on the 4-hour time frame, we get into market analysis and market time frame, the differences and stuff. Stay away. The market's not going anywhere. It's only going sideways in a tight space. But again, for my instance here, right? What did I tell you? Didn't I just give you an example of what happens here when the market is setting you up for selling the market here, right? It sets you up, setting you up here, and it's setting you up here. What did I tell you what was going to happen? I just drew you an example over there. The market it's already bullish. Look at the market's going up. Our eye test says that this is going up, right? So when we look at it here, set you up for the sell. Yeah, sell. Buy. All the people who were in a buy here got wiped out. All the people who were a sell, move away very, very fast. I just gave you an example of exactly what is going to happen. Just gave you the perfect example. And I'm going to end this video right there because that example is just on key. It's perfect. The perfect example. Okay? Only buy in trending bullish markets. Only sell in bearish structural markets. Markets that are going sideways in between this little box here, it's just tight consolidation, just building liquidity, right? And most of the time, it's just going to go the way it intended to go. But people have this mindset that the market goes up, it must come right back down. That's untrue. It does not have to go right back down. It will come down to make a pullback, but when the market conditions give you the sentiment that it's going to go down based on structural base, break, pullback, close, and now we're facing down. Okay, that's a total different ball game. So it's your boy, man. Do subscribe, and we'll catch you on the next video.